Very good evening and warm welcome to all of you yet again. We have been conducting series of webinars and events on corporate tax. Those of you who are following us are aware of this. We have been lately picking up topics, the relevant hot topics, case by case, which we feel are very important topics, industry by industry and topic by topic on corporate taxation. Today, we have picked yet another very important topic, which is about investment fund and investment manager taxability under UAE Corporate Tax Law. We have been following the law even before the law came into effect, since the public consultation document came in, and we have so far done about 8 to 10 either events or webinars on UAE corporate taxation. We have been able to put together a very strong team on corporate taxation and technology. Karishma, can you flip through the slides of our team? So we have a very strong team on tax and technology, which will help you, which will help implementation of corporate taxation in this part of the world. As far as today's topic is concerned, regarding investment fund and investment fund managers, we have divided into 4 categories. Category 1 is investment funds. Within investment funds, we will cover the taxability of investment funds who are registered in mainland or investment funds who are registered in UAE free zones, which is DIFC and ADGM, as well as we will also cover investment funds registered in foreign jurisdictions. There might be, certain cases where investment fund registered in foreign jurisdictions might fall under UAE corporate tax jurisdiction as well. We'll cover that, how and why it will come. Also, a typical fund has an investment manager. Again, within these 3 categories, an investment manager registered in UAE mainland. We'll get to know by the end of this presentation about the taxability of it. An investment manager registered in free zones, whether DIFC or ADGM, and an investment manager registered in foreign jurisdiction. So there might be certain cases where investment manager registered in foreign jurisdictions might get into the UAE taxation as well, right? So we'll cover what all those instances can potentially be. Apart from it, there is a separate category of investment funds called REITs, and there is a separate ministerial decision related to that as well. We'll cover certain specific conditions related to REITs as well. A typical investment fund has investors who invest in a fund, and we will also cover today how investor will be taxed if the investor is investing via investment fund. So I am here with my colleagues Prateek and Karishma. They will walk through all these different categories and the law as well as the ministerial decisions which clarified a lot of other conditions which is there in for the investment fund and investment fund manager. Over to you, Prateek.
Thank you so much, sir, and a warm welcome to everyone who's been part of this session. So this is divided in, like sir said, it is divided in investment funds, investment fund managers, and REITs. We will cover gradually about investment fund in the first part. Now, what is an investment fund? An investment fund is something that will raise capital for investments into real estate equities or startups, and the main business has to be of investments. What will be the income that will be generated out of it will be distributed to the investors. It will it is generally the funds range from 3 to 9 years, even 11 years in some cases, and it will distribute on yearly basis, maybe dividends, maybe interest, maybe other profits if the exits are taken. So that is categorically what is an investment fund. Now, generally, an investment fund is an exempt person if it is applying to an authority. So if it is not applying to an authority, you may be facing non-exemption on that. So it is very important that an investment fund has to do the application, number 1. And then moving on, there are certain conditions which has been defined in the law, which says that investment fund manager or the investment fund, either of them has to be regulated. The income out of the investment funds has to be mainly from the business of investments. Third most important criteria is it has to be widely available in the market or registered stock exchange. If these three principal conditions are met, you are eligible for exemption if you apply. Then in the Cabinet Decision 81, we got few more conditions which had to be fulfilled. Now, what are those conditions? Very simple. The main objective has to be investment, but there is a 5% other ancillary service income that you can generate. If a fund size of investors is less than 10 or 10, then a single investor with its related party cannot own more than 30% of the ownership interest rights if the size is 10 or 10 or less. If the size is 10 or more, the single investor and the related party can own 50%. So this is important to fulfill the condition. The third and the last important condition is the investment fund manager entity to have three individuals to run or three professionals to run that investor fund. If all of these conditions are satisfied, then an investment fund is up for exemption. But again, repeating it because it is very critical, it has to be applied to the authorities. If it is not applied, you will not get the exemption. Moving on to what is, the investment fund exemptions explained in 30%, 50% criteria. So the cabinet decision made it very clear that the business income that is generated has to be from and only from investments. But yeah, as I said, 5% is allowed to be ancillary revenue. Less than 5% or 5% is allowed to be ancillary revenue. If one of the conditions also is not met, then also the exemption will be denied. So it is very important to note that it is a cumulative and an and condition, not an or condition. So all of these conditions put together has to be met to get the investment fund exemption. Moving on to the very interesting topic of investment fund manager, which is very, very critical when it comes to uh, the investment fund manager exemption. But that will be covered later on by Karishma. I would just give you an overview of REIT in terms of the funds. So in REIT, again, similar to investment fund, there are conditions that has been identified or classified in Cabinet Decision 81. These conditions more or less are similar except the percentages. So it has to be regulated. That is for sure. It has to be it has to be either owned by an institutional investor or it has to be traded in the real estate stock markets. The main principle should not be to avoid any corporate tax. These are the conditions that was there in Article 10 of the law. But under the Cabinet Decision 81, additional conditions were maintained. Again, these are and conditions and have to be fulfilled overall. So what are these conditions as mentioned in the Cabinet Decision? It says the value of the asset excluding land. The value of the total assets excluding land has to exceed 100 million dirhams. So generally a typical REIT has to be more than 100 million worth of assets excluding land. So it is very important. The share capital has to be greater than 20%, which is floated in the markets, or it has to be held by the institutional investors, two or more institutional investors. Now, what are institutional investors? Government bodies, banks, all of these people in large institutions, private equities are institutional players that has been defined. Average value of the asset when it comes to sale and purchase of the land or assets during the entire year. If it goes below the 70%, then again, you will be out of this purview. So the exemption will only apply if the average remains 70% to be carried forward for next year as well. So again, repeating it very simply, regulated main business not to avoid tax, it has to be on the stock market. The assets value excluding land has to be more than 100 million, and 70% of the assets have to be the same when you carry it to the next year. So I hope the fund structure is very clear. Over to you, Karishma, for investor manager and investors relationship.
If you have any queries or questions, please feel free to type during the course of the webinar. We'll take all the Q&As towards the end of the session.
Thank you, sir. So now moving on, as explained by Pratik sir earlier, that there are typically three sets when an investment fund is being set. One is an investment fund, second is the investment manager, and then there is an investor. So coming to the investor income taxability. So if I am an investor, or if a company is an investor into an investment fund, then as explained earlier, that an investment fund won't be taxable, but the investor who is investing in the investment fund would be taxable, as it will be considered as a pass-through structure. So as an investor, whatever income I am deriving from the investment fund would be taxable into my taxable income when, if I'm eligible to pay the taxes, and if I'm not, then it won't be calculated. So for example, if an investor is a natural person, then definitely that investor income won't be taxable, as he wouldn't come under the purview of the corporate tax. But if an investor is a company, then it would be taxable while calculating his taxable income for the corporate tax. So very simple, investor income would be taxable in the hands of an investor, whatever income it is deriving from the investment fund. Now coming to the another and very important topic, that is the investment fund or the investment or the fund manager taxation. Now what investment manager, there are many investment or fund manager which are being residing within the country, and to put it in a very simple language, two categories of investment manager. One is resident and another is non-resident. So if you are an investment manager and you are a resident located in mainland, then by default, you would fall under the purview of the corporate tax and liable to pay taxes on whatever income you are deriving as per the applicable tax rates that you will be there. But if you are an investment manager, resident, plus you are located in free zone, majorly the investment manager typically who are being registered now are in DIFC and ADGM free zones, the financial free zones. So if you are an investment manager located in these free zones, then you won't be coming into the non-taxability as per the normal law language that is being given. But yes, it has been specified under the qualifying free zone person that the investment or the fund management activities would qualify for a qualifying activities. So once if the fund manager activities are a qualifying activities, it will be considered as a qualifying income, and by that other view of the law, you would be coming under the exemption. You would qualify for exemption and won't liable to pay any taxes on that income. So if you are an investment manager in a free zone, won't be liable to pay tax. If you are an investment manager, non-resident investment manager, but if you are deriving or if you're having a permanent establishment within the country, then you would come under the corporate tax purview. So that's the major taxability on how investment manager would be taxed within the country under the corporate tax law. Now, it has been given in the law that for a non-resident person, as I explained earlier, that a non-resident person, if it's forming the permanent establishment in the country, then it will be taxable under the corporate tax law. But there are certain conditions which has been very exclusively given in the law, stating that the investment manager will not create the permanent establishment for its foreign investors or for its foreign investment fund if these conditions are being fulfilled. So if all these conditions are fulfilled, then it will be considered as an independent agent and would not create the permanent establishment in the country. So these conditions are very first, if the investment manager is engaged in providing the investment management or the brokerage services exclusively for its foreign investors or for its foreign investment fund. It is subject to regulatory oversight. Most important thing, that the investment manager which is located would not create the PE if it is subject to regulatory oversight. It may be regulated by DIFC or ADGM regulations which are applicable within the free zones, or if it's located in mainland, then by the SCR regulations. The third important criteria is the transactions are being carried out in the ordinary course of business. That includes dealing in commodities, real estates, bonds, shares, derivatives, securities, and also for the forex funds. Then it acts as an independent capacity. Whatever transactions are being derived with the non-resident person are at arm's length principle, and it receives compensation for carrying out those services. And the last condition that needs to be fulfilled is that it is not representative for the non-resident person and for any other taxable income which is being derived within the country. So if all these conditions are cumulatively fulfilled together, then an investment manager would not create the permanent establishment for its foreign investors, as well as if it is working for its foreign investment fund. So yeah, these are the major conditions which are being given. Now, to summarize the entire presentation as explained by Pratik sir and by me, it says about the investment fund, that is including the REITs as well as the investment manager. So if you're an investment fund, including the REIT, and you are structured as an unincorporated partnership, then definitely you won't fall under this exemption category that is being explained earlier. You by default will be a taxable person, but the taxable income will be taxable in the hands of the investors, as explained, not in the hands of the investment fund. But yes, investor could get taxable as it will be a pass-through entity. And if you are incorporated as a structured entities, like if you are a company, legal entity, or a shareholder or a single proprietor, whatever fund is being registered, then you can apply to the authority to claim the exemption. Again, subject to the conditions as explained earlier by Pratik sir in the presentation. And moving on to the investment manager, if you are a resident located in located in the mainland, you will be taxable. Resident located in free zone, not taxable, and it will be considered as a qualifying activities. And if you are non-resident, but you are having the permanent establishment of the non-resident person in the country, then you would be taxable under the corporate tax regime. So overall, this is the explanation given in the law as well as the cabinet decision 81, which gives the conditions for the investment fund and investment manager taxability under this regime. So with this was quite short and crisp presentation just to give an overview about this taxability on investment fund and fund manager. We would love to have any questions the audience has. But prior to that, we can have some poll questions to get more clarity, and then we can move to the Q&A sessions if that's okay. Or shall we take the Q&A first? What do you suggest, sir?
Let's go with the poll questions.
Sure.
Let's clarify each and every point that came during the course of this.
Sure.
In our takeaway slide. You are running the poll, Karishma?
Yes, just a minute.
Quite a heavy presentation.
I hope everyone is able to see my screen.
Yes.
Yeah.
So very first question, will a UAE licensed investment fund manager be subject to UAE corporate tax? So if everyone can just answer probably in the chat box or by just giving the answer in yes or no, then we would pop up with the right answer.
So
you can answer within 30 seconds probably.
Okay. So I think maximum people are writing yes, Karishma.
Overwhelmingly yes.
Okay, so the right answer is yes, of course, yes. If you are an UAE licensed investment fund manager, then definitely you would be taxable. Do you need to add anything, Pratik sir or Sheetal sir, on this question?
Yeah, I think one gentleman, Syed, wrote yes, subject to conditions.
Okay.
I don't think so. It's subject to any condition. It will be taxed.
It will be taxed. Yeah. In normal parlance, investment manager, fund manager will be taxed, except only when it is in the qualifying free zone. That's the only exception to this. Otherwise, it will generally be taxed.
True. So coming to the next question, will a foreign licensed investment fund manager be subject to UAE corporate tax?
I think people can use the chat
A or
box.
B.
Yeah, sure.
A or B.
A or B, yes, if it has a permanent establishment in the UAE, and the B is no.
Okay. Yeah, I think, yeah, it has
Overwhelmingly A. Huh?
A. Yeah, overwhelmingly A. 100% A till now. There is no one who feels it is B.
So I hope we were able to understand it, make it understand people in a better language, I guess.
Correct.
Yeah, so the answer is yes. If it has a permanent establishment in the UAE, then the foreign licensed fund manager would come under the corporate tax purview.
So, Karishma, before you move on,
Sure, yes, sir.
I mean, for for people who are not tax people, right? Can you clarify what is permanent establishment? How do somebody creates a permanent establishment in a very simple way? You know, in a layman's language.
So say in a layman language, if I want to say, I am, uh, I'm, I'm a resident and I'm having already my fund manager, suppose say in Cayman, and I'm holding all my assets over there, and I'm doing all my business from there. I have an investment fund, but I'm actually located in the UAE, and I've been dealing with all my investment fund or investment fund managers or my investors. All my dealings are being done with the UAE. I'm the local over here, but the only thing is I have set up a fund in the Cayman due to whatever the
This is about
reasons.
fund manager. Can you take this example only? So, if, for example, if a fund manager is licensed in some other entity
Right.
and operates through a person here,
Correct.
can you take this example? And that's how he creates a PE in UAE, particularly for this particular instance, this poll question 2.
Yeah, sure. So if a fund manager is already licensed or say regulated, already being there in the foreign country, fund manager, right?
Correct.
Yeah, it's already there in the Cayman or in Seychelles, wherever it is being operating, and it has another entity or just say a back office in the UAE to handle its businesses over here, or to handle its foreign investors from here, or to handle any of the local investors as well from here. So if that is being created, if it has a back office, but the main office is located in Cayman or Seychelles, then it will create a permanent establishment in the country. The office may be a small office, maybe a branch, or even a flexi desk, in whatever case, or even if individual person is sitting over here and handling all the cases for the fund manager, which is located in Seychelles, then it will create a P in the UAE.
Got it.
I
Okay.
hope that was me.
Yeah.
Shall I go to next question?
Yeah.
Go to the next question.
Sure. So next question would be, will a fund manager registered in mainland taxable under the corporate tax regime? So options are yes and no if certain conditions are being met. Love to have some answers for this question, hopefully.
Yeah, so 4 or 5 people have answered. I think it has been, people have been answering yes.
Okay.
Okay.
Okay, so the right answer is yes. Of course, if you're a fund manager and you're registered in mainland, even if you're regulated, just to add on this point, even if you're a regulated fund manager located in the mainland, still you would come under the corporate tax regime. The only exemption would come if you are located in free zone, and if you are located there, then you will get the qualifying exemption, qualifying activities exemption as explained earlier. So next question.
There is one question, Karishma. I think you should take this question, but we will take this question later on because it is something related to REIT.
Okay.
So I will take this later. Right? Tina will take this later.
Sure.
Interesting question.
Okay, definitely. So the next question is, if an investment fund is located in Cayman Island and its fund manager is located in DIFC, that is regulated, will the fund manager taxable under the UAE city law? Options are yes, as it is regulated. B, no, as fund management services is a qualifying activities for the qualifying free zone person. So we'll love to know the answers from your end. Will it be taxable, or will the fund manager not taxable?
So few people have said yes, few people have
okay.
Majority
Some have
has
said yes.
Yeah, majority have said B.
This has got big mixed answer.
Yeah. So just to repeat the question for the larger audience, the fund is registered in Cayman and the fund manager is regulated and registered in DIFC. Will the fund manager be taxable? So yeah, we have mixed answers here, Karishma. We have 4-5 people saying yes and 10-12 people saying no.
Okay, so the correct answer would be no, as the fund management services would be considered as a qualifying activities. Overall, yes, fund manager would be taxable, but if you're regulated, you get a benefit if you're in the free zone of the qualifying activities, and from that, you don't get taxable under the corporate tax. So, but definitely, if you're located in mainland, then you would be taxable.
Okay,
Another
just
question.
one second,
Yeah.
Karishma, before you move on.
Yes,
I think,
sir.
yeah, go
the
go
question?
to the question. Yeah, go to the
Sure.
question. I think this is mainly related to the free zone, right? This particular exemption, we are not getting based on the ministerial decision or the cabinet decision related to
Correct.
the fund manager and fund. This is because it is being defined as a qualifying activity in the free zone. That's why it is exempt, right?
Correct.
Right. So only free zone related fund managers get the exemption. The mainland registered fund manager doesn't get the exemption, right?
Right.
Okay. There is one question here, from Alpesh. He's asking, but what about the fund? Will the fund be taxable? This is a good question. So it's a foreign fund, right? It has to, Karishma, can you go to that slide? Let us answer this particular thing. A foreign fund will not be taxable if it satisfies all these conditions.
Correct.
Can you go to that particular slide? Pratik, which you just, which you covered?
Yeah.
A foreign fund will not be taxable if it satisfied certain conditions.
Is the slide visible?
Yeah.
So if it satisfies these conditions.
Yeah, if it is
right,
satisfying these conditions, it will not
be taxable.
Correct. I hope that helps, Alpesh. So to repeat for the understanding, generally a fund will get the exemption, not the fund manager. And fund will only get exemption if these conditions are met. The fund manager only gets exemption by virtue of free zone. That's it.
Correct.
Otherwise, there is no exemption for a fund manager overall in the law or the cabinet decision.
Correct.
Well, I think we can pick up the next poll question.
Yeah.
But whenever there is a fund which gets an exemption, please bear in mind that the investors, it is treated as a pass-through entity. And the
Correct.
investor, the income will be assumed as an income of the investor indirectly in the hands of the investors.
Correct.
So I mean, if it's an individual investor at this point of time, UAE resident, then because there is no personal taxation in UAE, it will not be taxed, right? But if it's a corporate investor, unfortunately, it will be taxed in the hands of investors. If it is not being taxed at the fund level, and fund is claiming that exemption.
Correct.
Okay.
So next question, can an investment fund fulfilling all the conditions automatically get exemption under the UAE corporate tax regime? So the options are yes, as it is an exempt person, so no need to apply. And B is no, it has to apply to the authorities to claim exemption. So will the fund immediately or automatically get the exemption if it is fulfilling all the conditions that have been given, or it has to apply to the authorities to claim the exemption?
So 80% of the audience feels it is B. There are 20% who feels A.
Okay, so yes, the correct answer is no. It has to apply, as also explained by Pratik sir earlier, that this exemption is based only when you apply to the authorities. Unless and until you don't apply, you won't be able to get the exemption that has been granted. Moving on to another question.
Yeah, there is an interesting point here from Sashi. He is saying if investment fund is granted as a pass-through status, which is an exempt fund, right?
Correct.
want the business income of the investment fund be considered as business income of the investor, meaning the natural person pay taxes on that income. That's a very good point. If the fund is in the business of doing business, if the fund is an investment fund and it
It
is,
will.
then it will not be. Then it's
Correct.
like it's a passive kind of an investment to that extent. If it is doing a business, which normally funds don't do. I mean,
Correct.
funds, even if they do business, they invest into companies and the companies do the business. So the business gets taxed at the company level rather. So largely a fund is not I mean, fund don't do any such business. But if it is an only investment, it will not be taxed because it will be considered as a passive income. Hope that
And
clarifies.
just to add on that point, sir, as also explained by Pratik sir, that the other ancillary activities of the fund, it can be there, but it cannot be more than 5%. So if it's
Correct.
more than 5%, then again it loses the benefit of the exemption that has been
Exemption.
given. So
Correct.
just
So
to add
if
on
you
that point.
registered as an investment fund,
Correct.
but you are trying to do some other thing, then you lose the benefit of that.
Correct,
Correct.
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 So the next question, if an investment fund registered in mainland, it's regulated, and its in fund manager is also registered in mainland, but it is non-regulated, will both qualify for the exemption under the corporate tax regime? Just to repeat the question, if an investment fund is registered in mainland, it is regulated, but its fund manager is also registered in mainland, but it is not regulated. Will both the fund and the fund manager qualify for exemption under the corporate tax regime? So the options are yes. The second would be no. Only the investment fund will be exempt, that too upon application, and only the fund manager will be exempt. So I would love to know, what does
So,
all think? Will both taxable or
so
both won't be taxable?
Karishma, out of the
Yes.
answers that is there,
Yes.
generally the fight is between B and C. A and D are
Okay.
ruled out. There are few people who
No,
are
I think
saying
C
B.
is overwhelming.
Yeah,
B is only one or two.
correct.
There is more B, huh? There's more
Yeah,
B
yeah,
came.
there are.
So this
So,
is
yeah, correct. Go ahead, Karishma.
okay. So the right answer is yes. Of course, only the investment fund will be exempt. All as explained earlier as well, that fund manager will get the exemption under the corporate tax regime only if it is located in the free zone, that too by virtue of the qualifying activities and for the free zone laws that are given. By default, fund manager would be taxable unless and until it is coming into that P and all those picture. But yes, by default, it will be taxable.
But Karishma,
Yes,
I
sir.
think B is also right answer. If you read the way we have framed the question, B is also right. Will both qualify for exemption under UACT regime? So
So
just to
B
give that benefit. Because the way we have framed the question, will both qualify for exemption? Both will not qualify for exemption. That's true.
So, no
Okay,
is
yeah.
correct.
So we can go B and C.
Yes, B is also right. Yes, but I think the important concept is the law is very clear that investment fund satisfying certain conditions is exempt. Correct.
Correct.
Investment manager is taxable. Correct.
Correct.
The only reason investment manager registered in DIFC or ADGM will not be taxed because it is falling under qualifying income. Correct. But otherwise, from the point of view of, from the CT law and the clauses and the, articles related to investment fund manager is a taxable category, right? Right. So that's the very broad, understanding that is there. And then the law also brings into effect any foreign registered manager, is operating through UAE also is bringing under the preview of UAE Corporate Tax Law.
Correct.
So that's the crux of the overall, the provisions that are there for investment fund and managers. Yeah, please go ahead, Karishma.
Sure. So moving to the next question, an investment fund which has 5 investors, out of which 70% is owned by Mr. A and his wife. Will this investment fund qualify for exemption? Options are yes or no. So hopefully based on the explanation given earlier by Pratik sir, that will an investor, it says that some categories are given, some criteria is given for investors for more than 10 or less than 10. If these conditions are fulfilled, then only the investment fund would qualify for exemption. So what do you think about this investment fund, which has 5 investors and 70% is owned by just Mr. A and his wife? Will that fund qualify for exemption?
So majorly the answer is no.
Okay. Still,
Yeah.
if you feel that, okay, they can get the exemption if it's being
Yeah.
owned.
Should not be related.
Correct.
Yeah, once you marry, then you feel that you should not marry. Yes. So somebody saying should not be related, but husband, wife, yeah, are related.
Okay, so the correct answer is no, of course, as explained earlier, that if the investors in the investment fund are less than 10, then more than 30% cannot be owned by a single investor or its related parties. So in this case, there are only 5 investors and 70% is owned by A and his wife. So that does not fulfill the condition, and hence the investment fund would not get the qualification as stated. Moving on to another question. If the ABC company is an investor in a qualifying investment fund, will the income derived by ABC company taxable under the corporate tax regime in the hands of ABC company? So will this income that is derived by ABC company as an investor taxable in its hand? The options are yes or no.
It's a A. Yeah.
Majorly people are answering yes, I guess.
Yeah. That's what the
Okay.
chat box says.
Correct. So, of course, the right answer is yes, definitely. If you are an investor, being a juridical person, legal person, the income will be taxable in your hands. Of course, as explained earlier, you need to adjust the uh, expenses or the income that is being derived from the qualifying investment fund in your taxable income. Just to add on this bit, if instead of ABC company, it would have been Mr. A being an investor owing the same 30%, will that come under the taxable? So the answer would be no, as it is an individual person. Individual is not taxed under the corporate tax regime. And if instead of ABC company, it's Mr. A, that person, that income that is being derived as an individual basis by the investor would not be taxable under this regime. Coming to another question, I think someone had asked earlier about the REIT. So if it's related something like this, or I don't know, we'll just see this question first. Will a real estate investment trust with 15% share capital by a government entity claim the exemption under this corporate tax regime? So the options are yes, as government entities and institutional investor, it can claim the exemption, not a problem. And second option would be no, as the share capital requirement to be held by the institutional investor is not being fulfilled. So what do you think? It would be yes, as government entities and institutional investors, or no, as the share capital requirement is not met? Are these two conditions to be fulfilled together, or it's an optional condition?
So
I hope
50-50.
people are answering. Oh, it's 50-50.
Yeah. It seems currently it is 50-50.
Okay, so the right answer would be no, as the share capital requirement is not being managed, not being fulfilled. So the conditions that are being given under Article 10 of the Corporate Tax Law and Cabinet Decision 81, these conditions are to be fulfilled together. And it's not like only if the institutional investors is the share is the owner, then it can claim, or even if the capital requirement is not met, they can claim. These conditions are to be fulfilled together. So as the share capital requirements explained earlier by Pratik sir, that it needs to be minimum 20%. More than 20% should be the share capital should be owned by the institutional investors, single owned, or by or multiple parties can own it. So as this conditions is not fulfilled, the REIT cannot claim the exemption that is being stated earlier. Coming to the last question. Will a REIT with total assets that is being valuing up to 150 million, including land value which is up to 80 million, qualify for the exemption under the corporate tax regime? So the options are yes, as the total value of the asset exceeds 100 million, as explained earlier, or no, as the total value of assets excluding land is only 70 million. So what would be the answer? Will this REIT, which is having asset value of 150 million, but the value of land is 80 million out of that total assets, can claim this exemption for the corporate tax regime, or that REIT won't be able to claim?
So overwhelmingly it is B, but there are
Okay.
few A answers as well. But yeah, majorly it is been B.
Okay, right. So the correct answer is B, of course, as the value excluding the land value should be more than 100 million. As in this case, the land value is 80 million. So the total assets value comes to 70 million, which is less than 100 million. So it won't be able to claim the exemption. Apart from that, also, apart from that, also the value of assets, it would have, if it would have been 100 million, even average value of those assets could have been 70 million, 70% of the total assets that can also be maintained. So yeah, these are the total poll questions that are being done by us, and now would love to have some Q&A. If people have some questions, we'd love to answer those as well.
Yeah, please go ahead and write your Q&As, because of all these answers. Lot of questions that were there, we have to find out. But there was one interesting question, Karishma, if I remember that,
Yeah.
was related to REIT
Okay.
and crowdfunding of real estate. Crowdfunding platforms are there these days, and will such platforms be considered as a REIT and can apply for exemption? I think, in my view, these platforms will not be considered as REITs. These are participating. It will be considered as unincorporated partnership. Suppose if in one property 5 people are investing, through a platform, that platform is a facilitator, right? It will be considered as a direct investment in real estate and probably as a unincorporated partnerships. So, there is no mention in the law particularly about crowdfunding platforms, but it talks about regulated fund. So a crowdfunding platform might not get into the regulated fund unless it is registered as a fund and also regulated. So hope
And-
that answers.
And currently, sir, to the best of my understanding, UAE doesn't allow crowdfunding, or the regulations are not very clear in UAE.
No, there are crowdfunding platforms in DFC registered. Real estate related crowdfunding platforms are there, Pratik. But they are platforms. They are not registered. If they are not registered as a REIT, then they will be considered as any investment through that will be considered as unincorporated partnership.
So
Any
is
other
GCC
question?
national individuals are taxable? GCC national individuals are taxable. I don't know, Alpesh has referred to this, but overall.
I think this question only arises when such an investor is an investor in a fund, correct, which is an exempt fund, right? Then only this question arises. And if it is an investor in an investment fund and an exempt fund, then it will be the fund being a transparent entity, a pass-through entity. The income gets taxed at the hands of either individuals or either at the hands of companies. And since there is no corporate individual tax in UAE, personal income tax in UAE, it does not get taxed, and it does not even entails taxing foreign individuals. Forget about even resident individuals. So being a GCC national individuals will not be taxed if he is an investor in an exempt fund.
So there were a couple of more questions. Are there any conditions which makes individual person who's UBO of a group which invest in investment funds and other investment classes as a taxable person?
Are there any conditions which makes a person who is UBO of a group? Are there any conditions which make individual person who is UBO of a group? Sorry, it's not very clear. Siddharth, are there any conditions which make individual person as a UBO of a group which invest in investment and other investment classes considered as a taxable person? See, if it is a UBO,
Family office where
there is
owner is
no
a
condition as such. There are no
Correct.
conditions which make individual person who is a UBO of a group. invest in investment or other investment classes considered as an investment as a taxable
He's
person.
talking about family office and foundation, sir. So which
No,
is
I think it is, if it is a family, it's a related, then you have to satisfy those conditions of related, parties, right? And then, if you are not satisfying that particular condition, you don't get the, exemption, fund related exemption. Otherwise, if it is one UBO or one family as a UBO, then it will be, it may not qualify as an exempt fund. It was largely invested by one single family. See, crowdfunding platforms which are regulated even in DIFC, I think this is one of the point. Even if it is not registered as a REIT, because the law is very clear that it has to be registered as a REIT and then classify this as, and then a REIT has to be more than 100 million dirhams of assets in it. Then only it will be able to qualify as an exempt fund. Otherwise, it will not be able to qualify as an exempt fund. So I think one of the questions that Tina raised, even if it's a regulated crowdfunding platform, it will not, unfortunately, get the benefit of an exempt fund. Siddharth's question is it's about a family office where owner is a local. It doesn't matter, if it's owner is a local or they don't distinct. The city law does not make any distinction between Emiratis and non-Emiratis. City law is about resident person vis-a-vis non-resident person, so it does not make any difference. Okay, I think
we have one question. Yeah, from Sashi ji. The question is, if the fund setup is in UAE, the fund is, I will tell you that it is regulated in UAE and invest in securities outside UAE and earns income, which then passes off to the offshore investor companies as business income in their hands. Will UAE corporate tax rate of 9% apply to investors?
Okay. If a fund set up in UAE invests only in securities outside UAE and earns income which then passes through an offshore investor company as business income in their hands, will UAE CT tax rate of 9% apply? See, if it's a fund, which can claim as an exemption, right? That it's an exempt fund, right? After satisfying all these conditions, then income will be directly considered in the hands of the investors, right? Of the fund, right? Now you're saying the investor is an offshore investor and it's a corporate, right? If that particular company is I mean, then it will not be, if it's a business, it will not be considered, because this in a fund, it is not considered as a business income anyway. The fund is an investment income. It was, if the fund is investing into business and doing business and breaching that 5% criteria, then it will not be anyway exempt fund. So hope that clarifies that if it's an exempt fund, it will not be taxable in the hands of individuals, right? Because if it's a offshore company, a foreign company, and if it is not an exempt fund, it will be considered as a business income from UAE and hence taxed even for foreign national.
Correct. I think there are no further questions in the chat box. We may wait for a couple of minutes if we get any more questions.
How about taxation of single family office registered in free zone? So this is not, this is not a fund question, right? It's a single family office. It's a licensed entity, and I think it is a free zone related question. We have to see whether the incomes are falling under qualifying income, and if it's a qualifying income, then to that extent, and the entity is qualifying entity, to that extent it will not be taxed. And if it is not a qualifying income, then it will be taxed. It will be like a body corporate. fund related exemptions will not apply to SFOs. I think no more questions.
Correct.
So thank you yet again for participating in our webinar. If you still feel that there are, if you have still any query, please feel free to write to us. I think we can write our email IDs here, and we'll be more than happy to answer your queries or doubts if you have any. But broadly, this this subject has been. There is one question. Yes, can we get a separate session for funds? I think this was the session for funds only, but I think the concept is very clear. The funds are being can claim exemption if it is a regulated fund, and and the fund manager is taxable. And if there is any further thing, please feel free to write to us, and we'll be more than happy to come back to you on this with our clarifications on this. Thank you yet again. Bye-bye.
Thank you.